we have an absolute shocker for you. As the head of the SEC, Gary Gensler, has just been revealed on video in 2018 announcing to his class at MIT that the majority of the crypto markets are not securities. Specifically, they are not securities in a legal sense. This clip was just uncovered hours ago, and this is as we just have news that Coinbase is literally suing the SEC for not providing clarity on the industry. Honestly, this is one of the biggest bombshell revelations and one of the most amazing pieces of news for the crypto industry that we have ever seen. Now, before I play this clip here, I want to be clear. A lot of people think crypto people are a little crazy. I know my wife does. But in the end, if you're in this industry and you believe in it, it's so plain to see the layers of gatekeeping that are trying so hard to stop the flood of this future technology from taking over. It's so blatantly clear to see the positive net good it does for the economy, for society. And finding out that a teacher that has not only studied this, but a professor that believes legally that these are not applicable to the securities laws of America, then gets put into a position of power and spends years gatekeeping and suing the industry. It's just a huge, huge eye-opening experience. No longer can anyone deny that the crypto industry is being treated unfairly, as the person who is spearheading the attacks on crypto has been caught red-handed. Check this out.
So we already know in the US and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities. Even in the US, Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test.
So just because this is a massive truth bomb, we're going to break it down step by step. He not only says that 3/4, and by the way, this is in 2018, so yes, the crypto market has changed somewhat, but certainly it hasn't changed enough to make the blanket statements that he's now making in front of Congress, in front of the world. By the way, under oath. This is why what happened last week is such a huge revelation. But going back, he said that 3/4 of the crypto market do not follow the Howey test under the laws of the United States, Canada, or other jurisdictions that have these securities laws, specifically referring to the jurisdiction of the SEC. But wait, there's more.
3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate. But for 3/4 of the market, it's not particularly relevant as a legal matter.
For 3/4 of the market, it's not particularly relevant as a legal matter. Now, don't get me wrong, a lot of coins have done token sales, and maybe he's excluding them from this. This does not necessarily blanket every single cryptocurrency. It's not to say that there can't possibly be securities within the cryptocurrency ecosystem. But what it is to say is that the biggest, most prominent cryptocurrencies, and really I think what he's referring to is anything that was not sold but mined or emitted or not actually just traditionally sold as a securities offering, is excluded from that. And certainly the way Ethereum behaves today is nothing like a security. Maybe if you want to go ahead and sue Ethereum Foundation for their $8 million initial coin offering, go ahead, go bring charges, and they can pay a fine on that $8 million, even return the $8 million, which absolutely zero investors will ask for. But the reality is that after that, Ethereum will go forth as a commodity. And in my opinion, this is one of the biggest, most bullish signs that we've ever seen. Not only do we see proof that the person who is apparently putting the boots to the crypto industry has admitted on record, on video, that cryptocurrencies largely are not securities, but critically, we've just seen Brian Armstrong, the CEO of Coinbase, who are now suing the SEC for effectively gatekeeping the industry unfairly, has just tweeted, wow, citing this video. It's hard to deny at this point that we live in a simulation where grave injustices can get uncovered and then make their way up to the highest levels of power, and most likely, very quickly, into the halls of the United States judicial system. We can look forward to a lot of sweet, sweet justice, I believe, coming to the cryptocurrency ecosystem, as the SEC now got a lot of splaining to do. And as I've believed for so many years, this industry will prevail. The freedom and prosperity that it brings are undeniable. And what's clear to anyone in this industry is that we've been getting gatekept by people who apparently don't actually believe in the things that they're doing to the industry. It's hard not to feel just a little bit of excitement in these moments, knowing that the game is young, that as much as they try to scare people away from this industry, you can only keep the genie in the bottle so long. We heard today that Visa has ambitious plans for cryptocurrency. Why would a company like Visa be pushing forward if they weren't 100% sure that this stuff eventually was going to be given a regulated lane? If this doesn't boil your blood in at least a little bit of a good way, then I don't know what you are thinking, smoking, or feeling. But if you're excited about this, give me a comment. Say comment red-handed in the comment section below. As always, we're here on the side of freedom, on the side of innovation, and it would be great to see a regulatory body that at least is giving this industry a fair shake. As always, I'm EllioTrades. This video popping up right here will explain China's endgame in their path to distance themselves from the dollar. It's truly shocking, and it will help you understand why gold and Bitcoin and the entire crypto markets are going to be absolutely critical to the next phase of the global economy. As always, I'll see you soon on the next one.